Yes, guys, welcome to cryptocurrency. That was the maddest 24 hours I've ever been a part of. I don't think I've received that many text messages in such a short period of time. But yeah, crazy. And there's a lot to learn from something like that. I've seen a lot of stuff on the timeline like saying, hope everybody's okay and stuff. I do hope you guys are all good. I don't hope you haven't put yourself in a situation where you could have been seriously damaged by something like this anyway. That's more the angle I'm coming at this from, because we are aware this stuff can happen. And we are aware of the geopolitical tensions and the context of the world right now. And we are aware of the asset class that we're trading. So none of us should be putting ourselves in any sort of overly damaging or detrimental situations in terms of risk management to our portfolios. Yeah. So that's what I hope. But I do hope you guys are okay, right? I'm going to talk about how I'm playing this now. This is not financial advice. This is just my opinion. We're going to look at some key levels. We're going to reshape the context. We're going to look at some structure of some of these assets that I'm personally, interested in. I hope you enjoy the video. And yeah, I'll see you in there. All right, guys. So BTC, believe it or not, I actually filmed a video yesterday. My editor was in the process of editing it when all this went off. And other than BTC, which we didn't get too wrong, obviously I wasn't expecting this. I'm not trying to make out like I was. Some of these altcoins took a bit of a battering, so we had to kind of move and reshape stuff. This is advanced tracking, I would say, which is going to be a new series that we're going to look at. But I'm just going to break down charts and give you guys a bit of an update, to be honest. So Bitcoin is not in a bad shape at all, right? You guys know, anybody that's learned from me in the past, we know how we do this in terms of identifying structure. So we have a higher low, and that's like a significant higher low, and that's another significant higher low, and that's another significant higher low. You could argue that one is as well. We haven't really broke that. And to be completely honest, like major bullish structure really is holding this kind of region. That's major bullish structure for me, because this is like the significant swing low. If we go to the weekly time frame, and we kind of look at it like here, like this is the significant weekly higher high, right? And for you guys that are like beginners, a higher high means, to me, people were willing to pay a higher price for Bitcoin than they were previously, right? Which shows that even as Bitcoin becomes more expensive, there's demand for Bitcoin at that price point. That shows that Bitcoin's attraction in the global markets is growing and increasing. Therefore, I would be bullish on the asset. The minute that you see a higher high break, yeah, so the minute you see that happen, so like a higher high gets broken and then we set a lower high, that then means that people, not only are people not willing to pay a higher price for Bitcoin at the recent swing high, they actually want to sell it lower than what they paid for it previously when they sold it up here. And then if we was to set another lower low, okay, so people now don't want to buy Bitcoin even at that price, they want to sell at that price. So now that shows that Bitcoin's less attractive in the global markets, okay? And that means that I wouldn't be as bullish on Bitcoin anymore. That's just simple charting 101. And it's good to explain like that, because some people talk about high highs, high lows, and they just think it's chart patterns. It's not. It's telling you how all of the participants of the asset is perceiving the asset. To me right now, people are perceiving this asset positively. I'm positive on Bitcoin. We had this gray box on. I did put an X a few weeks ago about this liquidation, these liquidation levels down around this price point. To be completely honest, yeah, I didn't think that this was a possibility when we were kind of trading into this zone. When we kind of broke out of that, my personal opinion was that became invalidated. So I'm not going to sit here like I'm some magic magician who called this. I didn't, right? You can get lucky with calls. But one thing I was, guys, is definitely on the fence and had the possibility in my mind that something like this could happen. Because when we look at the context of stuff and we look at like how BNB was trading, for example, BNB was an extremely overpriced asset for its current context. When we look at other L1s like Solana, and we look at other L1s like Ethereum and, say Hype, for example, right? BNB had a chart that was very, very, the chart was an anomaly. And sometimes you can use these larger L1s and chains in cryptocurrency as the thermometer for the psychology and the attitude that investors have of the overall market, like the players in the market. Yeah, maybe not the institutional level, but the players in the market and their sentiment and their thesis and their idea of where we are in the market. And to be honest, there was this kind of euphoria amongst crypto. I think that was like an undertone euphoria, to be honest. And I did feel a little bit bearish heading into last week, because I was just like, I feel like we might need some sort of reset. And obviously Trump's put a tweet out regarding tariffs on China, which could potentially escalate tariffs. And the reason why that's such a flimsy, catastrophic event and why it spiraled is just the way the market's built. So I want to explain something to you guys, right? Say, for example, we have the markets, we have price on the right side. People buy in consistently at these different price levels. And those that use liquidation, leverage and margin on exchanges, these lines here, you get areas of liquidation levels. Liquidation levels is where you basically are forced to close your position based on how much you're borrowing, right? And there are liquidation levels across exchanges everywhere. If we go to Bitcoin's liquidation heat map, for example, on the three-month chart, right? Say, for example, we're here in price. If there's liquidation leverage above price, they are sellers, right? So they're sell liquidation levels. If there's liquidation levels below price, they're buying liquidation levels. And it shows here just how much liquidation levels there are that have been, right? So these are scattered all the way through the markets, like the underlying market, right? The actual market, which is the buyers and the sellers on these exchanges. This is Binance. You can look at all of them from like Bitgate, Bybit. You know, you can look at all of the liquidation levels, right? And they'll all be sort of relatively similar. But the point is, when you have an event like this happen, where you have maybe a little bit of a surprise to the market, a shock to the market, like a big sell-off, the market will seek out these liquidation levels genuinely just as a pairing. So you'll have these catastrophic sell downs and these assets, right? Let's look at Dogecoin. You know, that's much more illiquid, right? You're going to get events like that where the market seeks them out and it just goes down and then reprices. So you have to always be prepared for something like this to happen, especially when you look at the global context of the market. It's a classic risk-off move. We had the yields drop. When people buy bonds, it usually means that they're less willing to have. Let me break this down properly. If you see bond yields drop, it means people are putting their money into bonds. So the yield and the return for owning the bond yield becomes lower because there's more people buying it, so they offer less yield, right? So that's an indication of where money's going, especially when you look at, say, gold jumps up, and when you look at the S&P, sell off, yeah? And you look at Bitcoin, sell off, right? Bitcoin and the S&P, risk assets. Bond yield and gold, safe haven. So when the bond yields drop, it shows people are buying yields, it shows people are buying bonds, and when gold jumps, it shows that classic risk off kind of quick market kind of flash sell off, yeah? So we know that this is kind of that attitude, and crypto gets hurt harder because of the over leveraging that happens on these exchanges. Me personally, so this is important. You guys need to understand this. You need to understand the mechanics of the market and how this stuff works, because when you know this, right, you know that these events, we look at the S&P, took an absolute beating. I did have charts on here. I don't know where they've gone. There they are. Right, so we had this support, right? 6,671. I can see us maybe. Let's see how we head into Monday for the S&P 500. This was a clean double bottom. That was where I did think we were going to start, but we'll have to see how things trade. The S&P and BTC obviously correlate slightly because they are both viewed as risk assets. I stand on the fence, but I do feel like some money in Bitcoin is a little bit more of a safe haven perspective, but really Bitcoin is a risk asset. It's on the far end of the risk curve. So we can look at the S&P and how that's trading and how that looks as a decent indicator of how Bitcoin may trade and look in the future. And obviously Bitcoin and the S&P are pretty well mimicked here. But Bitcoin looked pretty sturdy, to be honest, off the back of that sell-off. This was a classic kind of move. We had 1 drive, 2 drive, 3 drive, and this obviously snatched all the liquidity, and we've seen that move to the downside, right? So where next for Bitcoin? I just think that the best time frame to look on right now is the weekly time frame. That's where I feel most comfortable when I'm looking at like sort of the big next steps, because this has changed things contextually. Bitcoin is at a nice area right now and it's holding this up. Like I said, if we can kind of sustain above this price point, I'm going to be looking to continue to look to bid the market. And one asset that I'm really interested in personally to look to bid the market is Solana, wherever it is, right? Solana, this was my buy box on Solana, who kind of dropped deeper. Now I'm looking on the daily time frame slightly towards this kind of region of 170. And you might be thinking, Mal, why would you not just buy here if you've had that lower, if you've had that sort of interest buy box here? Well, because when we pull a Fibonacci from this contextual low, which was a significant kind of move. That 61.8% lines nicely with that $175 price point. So I am going to sort of set a little limit order here on Solana, maybe stack some orders below. And also we kind of had that wick push down into it. We kind of sold up on the day here. I can see us heading into this Monday and kind of finding a bottom, which I think is a great area to look to accumulate Solana. Most people will be fearful now and will probably start to look at things a little bit differently. I've kind of reshaped my philosophy on how I'm approaching the markets based on how the start of the year went. Start of the year for me was probably the worst trading I've ever had. You know, given how experienced I am and given how I performed, I think basically lost consistently like 15 trades trying to short the market in crypto, trying to swing short the market. While I do think you can short on intraday charts and stuff, I think you're better off looking to accumulate and looking to capitalize on upside. And if there is no upside, we risk off and we secure profits and we go defensive. That's my positioning currently. And then there is assets that you can short, like vaporware, like shit assets when you have a deep understanding of fundamentals and stuff. But for me, Solana is a great buy from these levels, even from this region. I'm traveling over the next few days, so I'm not going to get into any trades before that. If I miss it, I miss it. I don't really care too much. Hyperliquid looks really, really good from this price point as well. That was an area of interest for me, but this wick is kind of ugly. And I do think that we might see a little bit further capitulating across the markets. I'm not betting that there's going to be some drastic bounce, to be honest. I do think there'll be opportunities to buy slightly lower on some of these tokens just because of how shaken up people will be. There's going to be a lot of rebalancing of portfolios. There's going to be a lot of structure changes, a lot of kind of moving around of capital, and I think there's going to be a lot of resetting psychologically, and I do think that means, from what I've seen in the past, some sort of pullback, slightly lower, maybe not anything drastically lower, but if we go back to these significant kind of sell-offs that we've had, you know, we do kind of revisit somewhat. We do kind of at least revisit, like this was a bit of a nasty sell-off. We do sort of like revisit this kind of stuff, right? We do kind of see that, and we've seen it before. So that's sort of my thinking. I do think maybe Bitcoin will bounce and sort of like trade sideways around here for a little bit. And I do think we might get slightly deeper prices on the Solanas. The Ethereum's just like looking at it intuitively, like key levels, that we have these key levels where I can think that we might retest. And then that's where I'll start to get aggressive. I do think though, when the market does find its feet again, we will start to see some nice, exciting higher prices. A couple of assets that have really bounced well, BNB. Also, crazy, but it has. Aura bounced beautifully yesterday. Like, what on earth? Aura's looking very, very good at the minute, to be completely frank, off the back of that's like I've hold memes before off the back of the significant event, liquidation event like that, and they do take a bit of a battering, but Aura sort of bounced, shows that the holders are in a little bit of a different mindset, which is positive. SPX is one. Yeah, so SPX was one of them ones for me where I was really interested in a long from $1. And we've kind of been gifted that back. This has been a really good, really like top performing asset. I'm probably going to cover it in the next Beyond the Meme episode, to be honest. That was it. That got hit quite hard. You can tell that there was some leverage buildup on SPX. It's been like hit quite significantly. But, you know, overall, it's got a really good chart. And I think as long as it holds above this kind of significant low, it's all good for like another move higher. So that's sort of how I'm looking at things right now. Aura looks good. Where I'd love to get sort of interested would be Solana from like, let me move this blue box down, like Solana from like these levels, and then like hype from maybe this level around the $30 price point. I'm definitely going to accumulate more hype spot for sure. Aster as well is one of them ones where like, okay, it's taken a battering, but it bounced really nicely. I'm just going to be patient with this. On the last video that I filmed, I was like looking at this key level, and maybe we could have some sort of wedge pattern build. We're gonna have to see. There's a lot of kind of murkiness around this token right now. Overall, though, I hope this gives a little bit of clarity on what I'm seeing and what I'm thinking. I'm still bullish, to be completely frank. And I think if you position yourself as a perma bull in the way that you just got to be patient and wait for these correct moments. And also, like, don't over risk and over leverage. If you're taking swings like 3 or 4x leverage, relatively high margin, have a take profit level and secure your profits, and then rotate them profits into spot, and then go again, and then go again, and then go again. Don't be over risking and over leveraging and getting yourself hurt by this stuff, because it can happen. This is the markets that we're in. Hope everybody enjoyed the video, and I'll see you in the next one.